Hello and welcome to analysis of XAUUSD Gold. My name is Vic. I'm the founder of Vikinsa Capital Management. Gold has been consolidating for past few weeks, and the price action has not been very decisive. So there have been a lot of speculations whether gold is about to break up after this double bottom, or if it's further going to go down to test 1600 or so and then start to rise up. So in this analysis we will look at some of the levels, scenarios, and some of the cases where we can find trade opportunities. So let's begin. All right, so what we're going to do is we'll start from monthly time frame as always, because higher time frame analysis is the must, right? Because higher time frames are the ones which are driving the market. So what we have is actually monthly time frame here. In fact, let me go to 3 months time frame. By the way, if you have not seen my previous analysis, please do go and check that out for past couple of weeks, for past few weeks worth of analysis, because then it will start to make more sense. I'm not going to repeat all of that again, but I'll just give you a little update on what has been happening on higher time frame. So I'll start from 12-month time frame. Now, on 12-month time frame, what we can see clearly is that market has been going up and then fell down. Now, this is at a particular level where it can bounce up. However, we are looking at 12-month time frame, so this is going to take at least a year or so. um, so always keep things in perspective, right? When we are looking at that time frame, it is minimum that time frame that can actually apply to the analysis. But what we have is that this has been an upward move and the market is kind of taking a correction. So the gold overall has been taking this sort of behavior. So this was the upward move, and then we have a correction, then we have upward move, then we have a correction, and at some point in time gold is going to correct, and then it will start to move upwards. So that is the hard time frame analysis of it. So what is that level? There should be some sort of level which can provide support to gold in the medium to long term, and then it can start to rise up. So these are the things that we should find out in our analysis, and we should trade in the direction of that higher time frame. Now if I go to the 6 months time frame, let me take the right pointer. So if I go to the 6 months time frame, which is here, what we can see is that it's simply falling down. Why? Because we had a very good rejection candle and then we had this candle as well. Now, the 6 months have already been finished, right? So this 6 months candle, if it stays like this or if it falls a little bit further down below this level, then there can be another 6 months of bearishness, because the candlestick pattern is made above these three. So we have this bullish candle, then we have this rejection bar, and then we have this bearish candle, which is below the previous bull candle. That usually signifies that we will have another candle of bearishness. So that can happen on 6 months. So it all depends on how this current 6 month is actually going to work out. And we are in the middle, we are towards the end of the October, so we have near about 2 months and few days left until this changes completely or it starts to fall down. So we'll have to keep an eye on this 6 months time frame. We'll go to the 3 months time frame after that, and 3 months time frame is where the entire indecision happening. Why? Because first of all, this is the last quarter of the year, right? So the market has been falling, actually, as we can see, it has been falling straight 6 months down, and this month it has been trying to find its footing. It's trying to see whether it wants to go up or down, and there is a lot of indecision. That is why we are seeing this sort of consolidation happening on gold. So if I go to the monthly time frame, what's happening here is that, as you can see, the market tried to go up, and in the last analysis, if you remember, this is what I said. You see, we have a candlestick pattern. We have a formation of three candles, followed by three candles. Okay, so that is a kind of candlestick pattern. And after that, market does, it tries to go and forms a bullish candle, which can still happen. By the way, this month actually can end as a bullish candle for gold. So we are here, it tried to become bullish in the month of October but then fell down, and it is now indecisive, right? So this is kind of a doji candle, which is indecision. So it can still go up and close as a bullish candle. Okay, if that does not happen, if by end of October this turns into a bearish candle, preferably below the previous low, then we will have further 2 months of bearishness. Remember, we talked about 3 months, like going down, further down. So that can actually can happen. So this is what we have. So current month is very important, and we'll have to see in the last week of October whether the gold goes up to close as a bullish candle or not. Okay, let's go to the weekly time frame. On weekly time frame, what we can see, this was quite evident on monthly as well, but it is better on a weekly. What we have is actually a simple formation of M pattern. So we have this M pattern. Now M pattern, what happened, this midpoint was actually broken here. So this was the last support. Everybody thought, including media reports, that this is the bottom and the market was going to go up. We stayed with our short bias and the market kept on falling down. Then it went higher to test that previous support, which has turned into resistance. And what happened 2 weeks ago? This bearish engulfing candle appeared. Okay, which means that market is still bearish and it can still fall down. However, the last week was like this, like a little candle. So what we have to see is that how the market actually opens this week, because if the market opens and then starts to go below this previous level, because you see right now this is forming a double bottom, right? So if let's talk about bearish scenario first. So if the market breaks through this level, okay, as soon as the markets opens, or at some point in time it breaks through, then it is going to fall down to somewhere around 1580 level to 1525, right? In that zone area, this can fall. And one of the reasons why it can do that, and why there is a good possibility of doing that, is because of, very easy, we have this M pattern, and this M pattern does not complete here, it actually completes somewhere around here. So that is why it is a good possibility that market will ultimately resume this, but it remains to be seen whether the October candle turns into bullish one or not. Even if it turns bullish, the next 2 months can still fall down to complete the M pattern. So that is also a possibility. So if you're looking for long position, there may be a long position around here in October, or if the market completes the M pattern, and then it can go back up. But for now, trade what you see. Okay, and what you can see is that we have this previous retest of the structure and then engulfing candle, right? And then we had a little rejection, double bottom. So that is why there is indecision, because see, this engulfing candle is telling me that it wants to go down, but then we have double bottom, which tells me that it wants to go up. So trade what you see. So if you find an opportunity for short term, you can do that. Otherwise, what you'll have to do is actually wait for this level, the double bottom, to be broken before you can start to look for a short position into the completion level of that M pattern. Okay, so this is what we have here. Now, if I go to the daily time frame, on daily time frame there is not much happening, apart from you'll see a lot of people jumping for joy that this has become a double bottom, which is fine. I don't deny that, but you see, it needs to prove itself. So we have this trend line which has broken through, so it can actually rise up a little bit. But remember, we have this level here, the structure level, so that can act as resistance. The market can come down here and then start to fall down. So there can be good levels where you can go. If the market gives you long opportunity, you can go there, but do not hold it for a long period of time, because it may actually still fall down from any of these levels. So trade what you see, right? I have already repeated like 3 4 times already, right? So this is what we have on daily time frame. Now let's bring in the analysis that we've been following. Right, so this is the zone where it can fall to, approximately somewhere around here. Now, this is not premium analysis. The premium analysis subscribers get better levels, and they will have far more better scenarios and all the conditions present in there, and it's in-depth analysis. However, this should actually be able to help you, as always. So if this double bottom is broken, then we are looking for something like 1600, or even lower than that, somewhere around in this area. Okay, so that can be a good level to look for short. And if you find a confirmation either in this zone or above this zone, then we can go for a long. So this is what we have here. Now, if the market continues to go up, because we have got a double bottom, if the market continues to go up, the next stop is going to be, next target for the long position, or the next stop where it can come back down or react, is approximately 1662, which has been very important. See, there was a consolidation before the market broke out. The market could be going upwards towards like same structure level before it falls down. If it continues to go above that, or if you find a confirmation to go long above 1662, then approximately 1680 or maybe slightly higher 1680 to 85, that can be a very good target. And if that is also broken, then we are looking for FCP zone, which is going to 1690 or so, 1700 or so, like approximately that level here. So that is the bullish scenario. On bearish scenario, all of these levels which I'm giving you, they can act as your targets, and they can also act as reversal points. What I mean by that is, if the market continues to go higher at 1662 and reverses from there, if you get a confirmation, you can go for short back into 1632, maybe this low, and then falls back into 1600 zone. So that is also a possibility. So all of these levels which are bullish targets can also act as reversal targets. So trade one level at a time. Okay, do not just look for moonshot sort of a scenario. Okay, so this is what we have here. Now let's go and do another kind of analysis, which is what I envisage. So the people, subscribers who have bought envisage, they already are aware what is going on here. So let me actually show this to you as well. You see, this line here is long term trend. Okay, so the long term trend is like, because I'm looking at monthly time frame, so this is like yearly sort of like trend. So the market is still bullish because this is blue in color. However, the monthly trend here at the bottom has turned red, which means that market is bearish. Okay, now this trend line, this curve, we call this middle line as curve. This acts as support and resistance. So whenever the market comes here, it shows like some resistance. Whenever it comes there, the market supports it. So something like it starts, the market reacts to it. Now here what you can see, that market has not actually given us a bullish candle, although the market pushed the price up because the market is trying to go beyond this water curve. The market gave us a bullish scenario in the month of October to start with, but then it has fallen down. So there is still a possibility that market may go back up and create a bullish candle this month, because it is trying to cross over this water curve. That is one thing. Next thing is that, as I said, this is already bearish, and this is bearish, and we already have a signal. Sell signal was produced in this candle at the start of this candle. Okay, since that market has been falling, and this is the potential target, and second target is approximately here, and these targets coincide with the targets possible by the M pattern, the one that we just saw in FCP analysis. So let me give you these levels approximately. So Vata says that it can fall to 1598.68, approximately that. So 1600 round, and it can also fall down to near about 1565.37. That is also a structural level here, and it's a completion of FCP pattern, M pattern as well. So this is my analysis on gold. Hope you enjoyed this. Make sure you hit the like button. It's quite an in-depth analysis, so make sure that you share it with other traders and trading communities as well, because they can also benefit from it. And I'll see you in the next one. Have a great trading week. Thank you for watching. Find and follow us on these social media channels.